And Lisha, I'll let you take it from the other side of the coin
Yeah.
on GPs. How do you think about that in terms of how GPs should be reaching out to PayPal and
Yeah, I mean, I think it's the same thing. If you are a general partner looking for an allocator, look at what that allocator's investment thesis is too. Like we all have things that we're focused on, things, industry, geography, and do that homework too, right? So that we can be helpful and have a mutual relationship. And also just, put your best foot forward because the ecosystem is very well connected, right? So even if it's not me or PayPal, maybe there's someone else who might be within your wheelhouse that I happily can refer you to. I get a lot of LinkedIn mail. I'm very open on LinkedIn. So, shoot me a note, see what I can do. But I do think, for GPs, I think it's also uncomfortable for GPs to be marketers. But I think every GP has to be a marketer. And you have to tell people what your fund is about, what you're doing, what investments are you excited about, how are you getting those investments. So the more you can put out there about yourself, it's helpful for us building in confidence into the execution of your plan.
And how are you guys thinking about, I mean, LinkedIn is definitely a platform that a lot of people are using today. Is Twitter still, or X still a place that you guys think is valuable to go for founders or investors to find deal flow or even founders? I know that was something that was hot back in the days, but is that something where you guys are?
I don't know. I don't know, Lisa, what your opinion. I've had very limited success there.
I
Okay.
have not. I mean, and I know there's very successful Twitter VCs that can access a different audience, but I personally have not been active in the X streets, sourcing founders. Um,
Yeah.
so
Yeah.
yeah, I think it's tough on that
Yeah.
platform.
Well, going back to where you're focused, and you said Series A and companies larger. What are some of the trends that you're seeing in these Series A companies, specifically in FinTech, that you can share with our founders and investors, and maybe outside of some of the trends, anything that you wish that you would see more of that maybe people are missing, or that you've seen in the past that you're seeing coming back? What are you thinking about now and are excited about?
I'd say one theme that we've spent a lot of energy on and that I think could be relevant for this audience is a theme we've called cross-border enablement, which is startups that are building for cross-border functionality, sort of understanding that consumers and merchants are in a multi-country reality. And for consumers, that might mean having your financial life or your personal life mixed across three countries because your family's in one place and you're in another, or you're kind of a migrant person who hops around. And for a manufacturer or a seller, same thing. Obviously, all of a sudden, we can sell everywhere, but getting the goods to Malaysia is a little bit harder, right? Depending on where you are. So I'd say cross-border enablement, both in terms of your personal financial life, whether it's remittances, cross-border bill pay, liquidity access in different countries. Well, call the suite of things around soft landing, visa, work permits, identification, credit score, all those things I think are more and more relevant as people start, there's more kind of labor mobility. And then for businesses, all the technology stack that allows you to pay your suppliers, to ship things overseas, to exchange currency, to do payouts seamlessly, even to do payroll in a compliant fashion across multiple jurisdictions. I'd say that whole family of businesses that have kind of one foot on each side of the border, so to speak, are really growing fast, and I'm very excited about it as a theme.
And are you seeing that opportunity more developing more? I know you said internationally, but more companies coming out of LATAM, or is this happening here in the US and you're seeing that reach into?
They're both. They're both. Yeah. I think generally what happens is some of these companies are created because a founder or a group of founders has a specific has specific knowledge on what I'll call a corridor. Like I remember a founder I met who had a very deep understanding of what it meant to be a Hispanic a Hispanic immigrant into the United States, and how difficult it was to obtain his individual tax identification number. This is for people who are recent migrants who are not eligible for Social Security numbers, but are still liable to pay taxes. And because they're liable to pay taxes, the only way to pay taxes is by getting this individual tax identification number. That knowledge that he in this case knew firsthand was generalizable to 10 or 15 million people who were kind of seeking answers. And so I'd say his knowledge on the corridor of that one allowed him to build the spearhead into a remarkable product where there are millions of people who wanted it. And then that gains him a vantage point and certain optionality to think about the next product or perhaps the next corridor. But what I am seeing is kind of this, we used to laugh about it. Some people will call it research, but a lot of these founders don't have to do research. They call it me-search. They were born knowing this because their understanding of the problem is so deep and innate based on the circumstances.
Yeah. Lisha, what are you seeing in terms of FinTech's trends on your side of the house in terms of maybe more emerging managers exclusively focusing this? Is it more on the B2B side? Is is there a specific mandate that you're seeing as PayPal Ventures?
Yeah, I mean, I think from the, in our funds, they're really pre-seed and seed funds. So they're really looking at early stage companies who are trying to really break down financial barriers. There's still a lot of exclusion in the United States. So whether it's a small business trying to set up access to different services, small business services, like we have a lot of funds that just focus on small business enablement as a focus, whether it's just getting access to traditional banking. So we have a lot of neobanks in our portfolio that are trying to define for a specific segment, right, and specific use cases. And so I think that all these things are still needed and still very valuable advances that we need to make in financial services and fintechs and being able to serve all people. So I think those are still very strong things that I'm glad the portfolio is looking into.
Yeah. Well, let's shift gears a little bit. And just for our audience, if you guys have any questions, please feel free to put it in the Q&A. Happy to answer any questions as we're going through this webinar. I want to make sure that we get all your questions answered and that it's an interactive conversation. So, as we talked about earlier in the discussion, this year has been quite tough, and FinTech has been, taken a little bit of a beating, and valuations overall have taken a beating on the industry. So how do you see what happened in the FinTech industry? Do you still think have valuations come back? What are you thinking about 2024? And as founders are going to market and maybe moving into that Series A, how are you suggesting they work on raising capital and pricing in the right way that they need to?
Well, I mean, that's a great question. There's so much going on there. I think through 2020 and 2021, we were riding a wave of optimism and exuberance. There also was an enormous amount of capital on the sidelines looking to be deployed specifically into FinTech. And those two factors kind of coalesce together to give us kind of a valuation anomaly. So, those vintages, the 2020 and 2021 vintages, people were raising money, somewhat easily. And there was a fair amount of competition for deals, particularly those deals that were perceived as can't miss. The consequence of that is that those valuations got driven up, particularly on the early stage. So some really, really, in retrospect, some valuations that perhaps aren't justified. What's come to roost now is that a lot of those companies are having to make really, really difficult decisions about how and when to raise their subsequent round, how to maintain kind of the integrity of their cap tables, and how to maintain their existing investors engaged in what might be some painful kind of future rounds. So the 21 vintage specifically is really struggling, I would say, with notable exceptions. But by and large, it just got a little too hot. What that has meant is that kind of generation of companies is gonna kind of face some friction, but there's going to be great opportunity for the healthy companies in that vintage that make it to a Series B and a Series C, because there's going to be far less competition. There's going to be so much mortality in that vintage. And so a Series B investor who invests in FinTech doesn't have a lot of work to do right now, because the Series A companies that should have made it through the cycle and kind of incubated to the point where that investor could touch it, now there's few and far between. We've seen, by and large, market corrections across all stages. I would say the seed stage seems to be the most resilient. And I say that because the seed stage does not have any of this kind of original sin, right? They're brand new companies, they're trying for the first time, and the market sort of corrects. So that's been the most resilient. And then I think, the depression in valuation seems to go down as you go later. So that's my impression. I would say from a market timing, we have seen some green shoots in the last, I'd say, 3 or 4 months. And I'm optimistic that through Q1 and Q2, the fundraising market will come back to some more normal levels. But I'm also very cognizant that I don't think we need it to go back to 2021. I think we need to find more sensible ranges of valuation that allow founders to be recognized for the effort they've put in, and but also set the table for subsequent rounds to be reasonable and for growth to continue. So I'm very optimistic, and in fact, that's one of the reasons why we're very much in the market right now. We think we have this unique opportunity to invest in generational companies right now, while some of our other colleagues are licking their wounds and trying to figure out what's next.
Yeah. And Ian, that 2021 vintage that you pointed out that is really struggling, what would you suggest to them? Like a lot of them are moving into a stage where they're looking for support through Series A, and even, PayPal potentially supporting them through a direct investment, even working together to help those. How should, as investors, we think about it, and how should the founders think about it? Because it's going to.
Question.
Yeah.
I think for founders, I would say lead with radical transparency. One of the things we fear the most as investors is kind of negative selection, or not being able to see a potential risk that's there and that we can't understand. That's oftentimes why many investors avoid doing down rounds or avoid kind of betting on a company that kind of went through an inflection and maybe didn't take off when it should have. There's this fear, that the fear of the unknown, of perhaps not understanding something fully. So I think it's in founders' best interest to be very transparent and say, hey, like, we understand our customer way better now. We know how to serve them. We have a great idea of how we're going to make it the next step. And we also acknowledge that our last valuation round may no longer make sense given where the reality is today. I'd say being transparent and demonstrating maturity around those conversations goes a long way. Obviously, when that turns into a negotiation, you obviously need to advocate for yourself and for your shareholders and do all those things right. But I would advise against assuming that there's going to be an automatic up round for you.
Yeah.
While you wait for that, I think you need to be proactive in managing cash. You need to, and that not only will extend your runway, but will also demonstrate your operational maturity to future investors. Meaning, hey, I managed through a storm. Not only did I grow and build this product, but I managed through a storm, and I'm still here. I think you get a lot of points for that, and in demonstrating that resilience and maturity.
Yeah. So key takeaways on that is be transparent, manage your cash, and really communicate often and how you're going to
I think
market.
that's right.
Lisha, what about you? I mean, there was a lot of emerging managers that came out in 2021.
The bang.
Specifically in this space. So what would you suggest if their portfolio is struggling and, they're seeing kind of the things that Ian's discussing?
Yeah, I think it's extremely difficult because we definitely, for diverse managers, had headwinds in 2020, 2021. And now you see our funds trying to go back to market, and it's extremely difficult. And, some of our funds took, they had a strong start and took them another year or two to close their fund, right? We have funds starting new funds who are not sure they can double the size of their last fund. I mean, this is the reality that we're seeing. And of course, while their portfolio, I mean, we've had a lot of casualties in the portfolio too, right? And so I think the fund to fund is like, it's a patient capital model. Like we have to wait till the market recovers. Some of our GPs are waiting to come back to market next year. We think next year will be a better year for fundraising, but we are seeing hope. We are seeing some checks being written, and we also have to encourage, the allocator community to come back, right? To come back to these funds, renew, follow up, and encourage them. These are really solid bets because you're still bringing out a lot of entrepreneurs that we wouldn't otherwise have known in the larger market. And so I think it's still important work. And it just might take a little bit longer, but hopefully that will change next year.
Yeah, we're all hopeful for that change. And so one of the things that you can probably control in this time to help with that is just getting more customers, growing, right? Having more revenue, hitting your targets and trying to do the things that you can control. Which is a lot of why you build these businesses, to really focus on your customer. So PayPal being a potential customer to whether it's an emerging manager or a founder, and I'll go to you. How do you think about if I am a founder and I want to potentially court PayPal as a customer? What would you recommend there?
I would recommend doing your homework. I think that's the starting point. I think, and I say that because PayPal certainly has a ton of problems, technical problems, different things we need to solve, opportunities. But oftentimes people think of us as kind of a financial supermarket. And so people will just show up and say, hey, I have a treasury management solution. Do you guys want to take a look at that? And we're like, well, I don't know. Like, understand that we are, a very, very large company, and that we have all sorts of different needs. So I would say, the lazy pitch where you don't do your research doesn't generally work very well. But if you come to us and say, hey, I understand this problem really well, and I think this is an opportunity for you, those slice through it like a worm knife through butter. I'd say that's the starting point. Do your research and get knowledgeable. The second piece is be persistent and resilient. Navigating a large enterprise, PayPal or any other, takes a lot of effort. And what you're going to see is you're going to be handed off from side to side. You're going to meet a ton of people. The way to win is to persevere and to not give up. Follow up, make sure that you're top of mind, kind of do all the right things in terms of pipeline cultivation. And the final thing is to demonstrate maturity, both operational and interpersonal. A lot of people at large corporates are really in the business of risk mitigation more than upside optimization. And so they want to make sure that the stakeholder that's on the other side of the table is someone trustworthy, someone reliable, and someone that they can scale with. So don't allow your desire and your drive to make you impatient. You have to play the long game, because cycles at large companies last 18 months, at startups they last 3. So just keep that in mind.
And do you recommend any specific channels to try to, like, if I was a startup that had a fit within at later stage that I think was a good solution, is there any specific channels that you recommend you approach, or kind of I know obviously warm introductions are always helpful, but if I just want to, share, like what you said, a thoughtful solution, I did my research. Is there anything that you recommend there on certain channels to approach?
I think it varies by enterprise. I'd say at PayPal specifically, think of PayPal Ventures as a great entry point for all things investment, but also partnership. It is part of our mandate to listen and to help connect you to the right people. In fact, one of the other roles that Lisha plays is doing exactly that. It's helping kind of startups navigate what can be pretty overwhelming. So definitely visit our website. There's a lot of information there on how to contact us, how to get in touch. And we have some dedicated inboxes set up just for this. Now, does that mean that every one of those will make it through? No, we have the job to be kind of filters and kind of a line of first scrutiny, if you will. But the door is open for sure.
Yeah. And Lisha, let's say they make it through, since you're connecting, what's the process like usually? I'm sure it varies, but if you had to.
Very, very lovely due diligence process that takes a very, very long time. No, but no, I mean, I think it's a relationship, right? We try to build a relationship with various founders, watch your business grow. I mean, PayPal is traditionally a later stage investor, so if you're early on, it's really just, can we, mentor, grow connections, like helping you build, connecting you with other funds, right? In my portfolio, is there someone can meet you where you're at, and just always have you exchange information or any insights that we can share. Happy to do that.
Well, I'm going to take a pause because I see a couple questions coming in, and this one specifically, Ian, this one's for you. It says, how do you see RTP and FedNow impacting commercial and consumer payments in the next 12 to 18 months?
I've got a small. Did somebody plant that question? Because I can spend 2 hours on this. That's a fantastic question. Rick, I see that question. Appreciate it. I think the impact of FedNow and RTP is the potential impact is massive, right? It's going to turn our financial system and the payments into real time, which sounds like something that should have happened a long time ago, but has not yet. All you have to do is look south of the border to Brazil or to India and see the success that Pix and UPI have had as real-time payment protocols. The adoption there has been shocking. I mean, the velocity. I think FedNow specifically has the same promise in the US, but I think the rollout in the US is going to be much, much slower. I think it's going to take a while, and I would say 12 to 18 months, we're not going to see as much of it yet. And I say this because in India and in Brazil, there was a central bank that recommended and required banks to join these protocols. That is not so in the US. The second piece is that the level of financial penetration in Brazil and India was much lower. And so these new payment protocols were not displacing something else. They became the first tool that a lot of these people use to interact with the financial system. And the third piece specific to Brazil and to Pix was that COVID was actually a massive, massive tailwind because they instituted their first kind of central bank governed digital payment system at the same time as people were trying to figure out how to transact online or how to transact with each other without physical contact. I think you should look at Brazil and India as examples of what the potential is, but I think the path to maturity in the US will take much longer.
Thank you. A whole TED talk on this topic.
Yeah.
And Rick, thank you for asking.
You're like, I am ready for this. Let's go.
That's right in my wheelhouse. I appreciate it.
Great. Well, Lisha, we have one for you coming in here. It says, Tomas Miller, founder at the Equivest cap table with 47 billion AUA. We built Cheekly, a neobank for startups. You mentioned neobank with different stage angle. The question is, how do you see equity, ESOPs, and banking, how they can merge and build product? And either of you guys can answer, but it was directed to.
Yeah, this is a great trick question, but a fun one, right? We talk about neobanks a lot at PayPal. It's one of our favorite conversations. I think neobanks have a unique opportunity to solve a different problem, right? And I think there's a few challenges for neobanks that I think about. So before I was a venture capitalist, I was a product manager and I launched PayPal Savings. So PayPal probably has the most unbanked customer base than anybody. Because if people can't get access to a bank account, they'll store their money in PayPal. This is what we learned when we were building the product. That was not an interest-bearing account, right? So you have a lot of people looking to store money and try to transact with it, and how to create utility in that transaction. And so you see a lot of neobanks trying to come in for these underserved markets and provide additional products, whether that's banking, checking, mortgage, trying to find a whole ecosystem. We also learned that once people mature, they want to graduate to mainstream. And so I think it's also a challenge we saw is, once I've been on my prepaid debit, prepaid this, I want to graduate. I want to get to whether it's American Express Black or whatever status, right? People want to evolve into mainstream. So I think you have to think about how do you sustain that value over time. Are there too many neobanks now? Are neobanks going to be effective in the long run? I think time will tell. Can neobanks build a product that no one else has built to differentiate themselves, right? And so I'm always rooting for the neobanks. I do think there's some untapped opportunities. And of course, around equity, if you have that much AUA, I'm excited. Giving your employees equity who are building these products for each other is also great because we need ownership, and we need places that are less predatory, honestly. And so, if you're building better practices and better risk and compliance, and building credit-worthy individuals that can sustain and live in our society, let's do that.
Yeah. Exactly. Well, thank you, Lisha and Ian. We'll continue the conversation. And again, if you guys have more questions, please enter them in the chat. I got one more question for you guys before we wrap up. And I know, Lisha, you guys have a new website that you want to make sure everybody goes to.
Is our new website.
If you want to drop it into the chat to everyone, feel free to share your new website so that everybody knows exactly where to go to get a hold of all the great folks at
you guys can follow us on PayPal Ventures. We have our own LinkedIn page, and it also links to our new site. So please do that, check that out. And I'll try to put that in the chat.
Awesome. Well, so I mean, the growth continues. We're optimistic, right, into 2024 and FinTech. So let's talk about what we're going to see in 2024 and maybe even potentially the growth and specific products that you guys are thinking are coming down the pipe, that if I'm a founder and I'm listening to this webinar, that I can think about how to innovate in different ways and some solutions. So I'll start with you, Ian.
Sure. I mean, I'll stick to the verticals I know, which have to do with kind of the financial world. I am more keen on B2B opportunities and B2B2C opportunities, as opposed to direct-to-consumer opportunities. I think the path to building a consumer-facing financial product and marketing it directly to consumers is very fraught. Some people have been very successful with it, but there's been a lot of roadkill. There's been a lot of people who haven't made it. I think when you think about the B2B2C angle, it means that if you are thinking about a financial solution for an individual, for a consumer, I think you need to define your distribution model very, very early on. And you should consider utilizing existing networks for distribution. What this means might be selling through a retailer that already has many branches, or selling through a marketplace. I would say going and kind of forging the dry earth and trying to kind of build your own brand from scratch is really, really tricky right now. On the strictly B2B side, particularly in FinTech, I would say taking a look at the financial establishment, be it banks, larger financial players like us, and understanding particularly opportunities for process improvement and back office improvement inside these institutions is very, very attractive right now. That might mean technology to help with fraud prevention, technology to help with cash management or cash allocation, or technology to move money around or for ledgering or things like that. I think those areas are where banks, as kind of the buyers of this technology, have big technology problems and are eager to find simple solutions that can help them accelerate. So those, I'd say, from a thesis perspective, we're definitely more bullish on B2B and B2B2C. Not to say that there aren't going to be some amazing direct-to-consumer companies. We just think that that path is very, very hard to travel.
Yeah, the cost to acquire that customer
Is really, yeah, it can get really, really high really quick.
go up. And then Lisha, for you on the GP side, if I'm a new emerging manager and I'm listening to this and thinking about I want to maybe break off and start my own fund, is that, how do you think about that? How do you think about new managers or maybe, starting something that's focused on FinTech, and how you guys are evaluating those in 2024?
We love FinTech, so please, yes. I think it's very difficult to start a fund. I think people say they want to start a fund and realize it's a whole lot of work going into that. It's a very expensive process. I think some of the trends that we're seeing is, solo GPs, it's kind of difficult for funding if you're a solo GP. So I would tell you, partner up if you can, because it's a very lonely, arduous process, and you're going to need all kinds of support. So that's the first thing. I find an amazing partner, an amazing team. And, own your wheelhouse. What is your expertise? Is it Latinx? Is it demographic, industry specific, whatever like make that your magic. I think being a generalist is really hard, especially if you're a solo GP. It's really hard to do, and that story is it's hard to believe because the market is just so wide. So I would say pick your niche, do that well, find an amazing team, and when the market comes back, let's get it.
Yeah, lean in on your expertise and go with a team that can help support that. Yeah.
I would even take that further, which is believe in your expertise and be strong enough to say no to stuff. Like just all the mistakes I've made in investing and have been because I think I know more about something than I do. Stick to what you know. Grow around the edges, but very few people are taking double leaps and winning. So just expand your expertise, but stick to it.
And we didn't touch on the big elephant in the room is we didn't talk about AI, but everything I know. We'll leave that for another discussion. But thank you so much. I don't think there's any more questions here. I believe we answered most of the questions. Oh, actually, there's one coming in. Do you expect to see more consolidation M&A activity in the FinTech space?
Absolutely, yes. It's going to have a whole host of different price tags attached to it. I think there are going to be companies that perhaps are not growing at the speed they should, or not finding the right acceleration, that may end up getting absorbed by other startups or large corporates in the shape of kind of asset purchases or acqui-hires. So yes, 100%. Some of those exits will be less shiny than others. And then I think there are still lots of late stage companies or mid to late stage companies that have uniquely great products and capabilities. And in this market, the valuations may be a little bit more attractive than they used to be. So yes.
Yeah. Yeah. And I was on another discussion with sort of the later stage investors in NASDAQ, and they were talking about how many deals are just waiting for the market.
Oh yeah, and if you also just look at the large incumbents in financial services, just check out how much cash all of them have on their balance sheet. A lot of companies have been waiting for the right opportunity to strike. They can't only just do stock buybacks and dividend it out. They need to start kind of moving it. So I think there's going to be appetite for the right companies.
Yeah.
I'm not an M&A professional, by the way, so that's my big disclaimer. But
Yeah. Well, thank you, Ian. Thank you, Lisha, for supporting our community. And you know, well, hopefully we can do this again sometime. I know that you guys are very busy, but we appreciate you supporting the Latino founder community. We appreciate you supporting and sharing insights on not only for founders in the FinTech community, but also emerging managers. So we appreciate that so much. And yeah, well, have a happy holiday week, and we will see you on the other side. Thank you for joining us.
thank you for having us.
Thank you for having us.
Thank you.
Bye.
Bye.